have you.
Of course. Thanks for having me.
Yes. Okay, I'll go ahead and stop share and then, feel free to start. It's good for you.
Okay, great. Hi, everybody. Welcome. It's nice to see everybody gathered today, and hopefully you're enjoying your day at Cornell. I know I had 4 years of it, so
Yeah.
it's a lot of
It's
fun. Of
snowing a lot, like all out of the blue.
course, it's snowing. That's what it
Yeah.
does. I think we had a rule you're not allowed to. I had a rule when I was a student at Cornell that with my friends that you weren't allowed to talk about the cold or the snow. I don't know if that sounds relevant, but
Yeah.
so I've been in the Bitcoin policy space since 2016. And prior to that, I was at the FDIC, where I was a regulator during the GFC, as some people abbreviate it, or the global financial crisis. And I'm going to walk through what's almost a little bit of a mini course on Bitcoin policy in the federal government at the federal level and give you some background and some history as to where we are with policy in the US government, some of the threats to Bitcoin policy. And I'll share the presentation. These are some questions to take home and think about because, for me or for anybody, there isn't really answers yet to these questions. So if you're interested in helping shape what the future of Bitcoin looks like in the United States, this would be a good primer or a good start. So I like to give the questions up front that, I want you to think about. How should the illicit use of Bitcoin be handled? It's a big question is it just the bad guys that are using Bitcoin or bad gals? What's a fair way for Bitcoin to be taxed? Lots of questions about that. How is when people use Bitcoin, the good people or good guys or gals use Bitcoin, how should the illicit use be treated? Currency, commodity, or security? Should banks be permitted to hold Bitcoin? To me, one of the greatest threats in your lifetime, I think, overall, will be the challenge to the US dollar or the hegemony of the US dollar as a global reserve currency around the world. One of the answers is Bitcoin. Current government also talks about potentially stable coins and more often CBDCs is the answer. CBDCs or central bank digital currencies, there's a lot of controversy around them because of its centralized nature and the potential of invasion of people's privacy. There's one in China already. So, how would you convince the US government maybe not to issue a CBDC and lean on Bitcoin as the answer? Bitcoin is also now becoming a national security issue, which is something that was always expected, right? If we're going to have a global currency, where it used to just be the governments that had currency, one of the issues is that North Korea or DPRK is using Bitcoin to fund its nuclear missile program. So what do you say to the US government about this challenge with the global use of Bitcoin when other governments start to use it as a store of value or medium of exchange? To buy things that put us as a country, in jeopardy. I want to tell you about Liberty Reserve dollars. So I'm going to get into the presentation in a minute. Excited to tell you about the history of Liberty Reserve. If you've never heard about it, you'll walk away enlightened from this presentation. And then just a few questions about the spot market, exchanges, and of course now Bitcoin ETFs. So with that, let me tell you a little bit about before Bitcoin. So before Bitcoin, which of course was in 2009 when it was rolled out, there was the internet, digital currency, privacies, and decentralization. So there were digital currencies that were around before Bitcoin. It's important to understand the context of these digital currencies that existed because that's how policymakers and particularly law enforcement started thinking about what digital currencies could mean. And these are some of the changes that have happened in the world that have led running up to Bitcoin, not just from a digital currency perspective, but also the development of the internet and peer-to-peer commerce or e-commerce. So in 1990, DigiCash was founded, and they created something called eCash in 1993. It was from David Chaum. I don't know how many computer science majors there are in the room, but David Chaum is also the one who created Chaumian binding or signatures as a way of identifying or verifying that if you sent a transaction in digital currency, there'd be no way to refute it. So David Chaum tried this, and in one bank operated this idea of Digitacash for a few years, but he did it through the regular prudential regulatory framework, which includes, Federal Reserve, Office of Comptroller of the Currency, FDIC, where I worked. So all the regulations really made it difficult for Digitacash to be started. It was also a centralized type of digital currency. For the first time, a gentleman named Stuart Haber and W. Scott Scornetta, this is cited in the Bitcoin white paper, created this idea that you could have a cryptographically secured chain of blocks that could timestamp transactions or objects on the internet. At the same time, a gentleman named Sir Tim Berners-Lee launched the World Wide Web. That really it's created the internet, or at least Web 2.0 as we know it today. In 1992, it's important to understand the history of Bitcoin from the perspective of what you'd call cypherpunks or crypto anarchists. A gentleman named Timothy May published something called the Crypto Anarchist Manifesto. And it talked about this idea that cryptocurrencies, one day, he didn't say cryptocurrency exactly, but that crypto would take away power from the government that they've had for a long time over the power of money, and perhaps challenge that. And then, of course, the Cypherpunk Manifesto published by Eric Hughes a year later. So there's this very much this idea of the cypherpunk was less about how crypto could take things away from the government from a monetary perspective. The Cypherpunk Manifesto focused more on keeping our lives private as the development of the internet happened. So even back in 1993, you had people who were worried about what our privacy might look like in the future with the internet. In 1994, I'm sure you've heard of Amazon by now. That's when Jeff Bezos launched Amazon, calling it the Earth's most customer-centric company. Some people debate that now. And then 1997, there was something called Hashcash. It was proposed by Dr. Adam Back. He also gets a mention in the Bitcoin white paper. This is about anti-spam and anti-DOS, or denial of service. So I'm old enough, and this really shows my age, where in 1998, when the internet started, and I was actually just leaving Cornell, there wasn't a spam folder. Every email you got was considered the same. So people could just send you random email. So Hashcash was this idea of, why don't we charge a little bit of digital currency or computing effort that would, charge you maybe 5 cents or something to send me an email if I didn't know who you were, to prevent spam mail. So that's really why Hashcash was created. 1998, B-Money was created by Wee Dai. He aimed to create really a decentralized system for peer-to-peer transactions, and was inspired by Timothy May's Crypto Anarchist Manifesto. And then BitGold was proposed by Nick Szabo, proposed using proof of work to validate payments. And then people probably recently look at Twitter, I'm assuming, which now is X, right, .com. So in 1999, just an interesting fact I thought you'd enjoy, but also important to this discussion, X.com was founded by Elon Musk to provide online financial services all the way back in 1999. 2000, Peter Thiel from Confinity and Elon Musk from X.com. They merged in 99. They changed the name to PayPal. 2001, we had the 9/11 attacks. I was in New York when this happened. And it was a terrible, terrible day for a lot of reasons. But one of the things that happened sometimes when this occurred, there was this thing called the U.S. Patriot Act, a law that affects all of our lives now, became law, and gives the government enormous amounts of power, particularly when it comes to financial transactions. 2006, Liberty Reserve was introduced, which is technically the first stablecoin, but it was all the way back in 2006. And again, this is before Bitcoin. Liberty Reserve was a group out of Costa Rica that created the notion that you could give fiat currency into an organization, and then you'd have a dollar-backed, they call it a stable coin, but they called it a Liberty Reserve dollar. But the government started worrying about what this might mean back then. We got hit with the global financial crisis, which is a story for another day. That's when I was at the FDIC. What's important about that is we saw the government start to fall apart as Bitcoin came to formation, with things like IndyMac Bank that showed people panicking about their bank closing, Lehman Brothers, which was not supported by the US government, and then AIG, which a few days later was supported with the bailout, the vast number of Federal Reserve programs that were introduced, what I like to call shotgun bank marriages, or, if a bank is failing, you sell it to JP Morgan Chase and everyone's okay. So with all that as sort of your backdrop, I'm going to assume you're going to hear a lot, or have already heard a lot about Bitcoin in 2008, 2009, so I'm not going to go into that. But I want to talk about the impact today of the regulation of digital currency and centralized exchanges and how that developed into where we are. So in 2011, Chuck Schumer talked about Silk Road, a senator, and that was the first time that really set the agenda. So let me skip this for a minute and go to Senator Schumer's saying. So Silk Road with Ross Ulbricht, who's actually still in jail. And there's a lot of work. You probably hear about Free Ross and stuff, trying to get him, a pardon from the president to get him out of jail. It was his first time he was charged with anything, but this is what Senator Schumer had to say when he caught note of Silk Road, which is literally allows buyers and users to sell illegal drugs online, including heroin, cocaine, meth, and users do so by hiding identities through a program that makes them virtually untraceable. It's a certifiable one-stop shop for illegal drugs that represents the most brazen attempt to peddle drugs online that we have ever seen. It's more brazen than anything else by light years. So from a policy perspective, this was really the tone that was set. And then in 2013, Liberty Reserve, which was this organization where you could purchase these Liberty Reserve dollars, and at the time, many digital currency exchanges, as Bitcoin became popular, they could exchange their Liberty Reserve dollars for Bitcoin. That was shut down by the US government, and at the same time, Silk Road was shut down. So Arthur Budofsky of Liberty Reserve, also in jail because it was considered money laundering what he was doing with Liberty Reserve. But it's important because what happened then is there was, from this Liberty Reserve incident, financial crimes, or FinCEN, they actually created rules around Bitcoin and what AML KYC laws had to be followed, meaning anti-money laundering, know your customer laws around Bitcoin, specifically as an application because of what was happening with Liberty Reserve. So that's why Liberty Reserve is important, because it affected the first Bitcoin policy we had. It's also important because they used Section 311 of the US Patriot Act to invoke this notion that Liberty Reserve was a money laundering institution. Now, there were a lot of bad people using a lot of money laundering at Liberty Reserve, and you could say there may have been some bad people using Silk Road. But what you really saw when you think about Ross Ulbricht, again, who's in jail today still, Silk Road was this notion he had of this libertarian concept of you could sell anything to anybody, and he used Bitcoin as a result. So it really comes from that cypherpunk manifesto of just people being allowed to do what they want, be able to have the privacy of the internet. Obviously, the government had a lot of problems with that. They also had problems with what Arthur Budofsky was doing, because he was using the US dollar as, again, what we now call stable coins, which is still a concern for the US government, and what that would mean as opposed to using regular dollars in transactions. So Mt. Gox happened in 2014. This is important because this is a centralized exchange. And Mt. Gox was established, it was originally called Magic the Gathering Cards. There wasn't a lot of governance, let's say, or organization around this exchange. Essentially, it was started by Jed McCaleb, that now runs another organization called Stellar that deals with payments in a blockchain. Went to another person, and then it collapsed in 2014. There were already lots of losses of Bitcoin, but they lost 850,000 Bitcoin, which was 473 million at the time. They filed for bankruptcy protection. Everybody thought Bitcoin was dead. But the collapse of Mt. Gox sent shockwaves through the community, and it damaged public trust in Bitcoin exchanges, which might sound familiar now that we've had FTX just a couple of years ago. So with Mt. Gox, from a policy perspective, again, when bad things happen, like with 9/11, a lot of senators or representatives put things on a spotlight. And in 2014, it was really serious. We had Senator Joe Manchin from West Virginia, who had asked agencies in the US government to ban Bitcoin. And this is his whole letter. I'm not going to read the whole letter now, but what's important is the degree to which he understands Bitcoin in this, explaining it's a cryptocurrency due to its rising exchange in relation, but again, relation to illegal transactions. So Bitcoin kind of got was considered a bad word, really. In fact, a lot of policymakers starting in 2015 with the government wouldn't even use the word Bitcoin. They actually started using something called blockchain, which you're probably familiar with. But this gives you a hint of sort of after Mt. Gox, people talked about banning Bitcoin, but there was so much attention brought by Senator Chuck Schumer and Senator Joe Manchin that we had the Office of Investor Education, which is sort of the leading arm of the SEC, concerned about what investors might be due, and they issued an alert about lack of regulation, price volatility, what you need to be concerned about with buying Bitcoin. It wasn't a regulatory action, but it was one of the earliest statements by the SEC. And some of the unique risks they talked about of investing in Bitcoin was it's not insured, it's very volatile, it's not legal tender, so there's not really government regulation around it, security concerns about Bitcoin exchanges, new and developing, it's this new invention, so we don't really know too much about it. It also caused questions with the IRS, like I was saying before about the tax consequences. So the IRS came out in 2014 and decided to call Bitcoin property, which is different than currency, right? And different than what the concerns were of FinCEN in 2013. But it was done really because I don't think the IRS knew any other way to treat it. So they really, this was policy that really impacted our ability to trade Bitcoin with each other or use it in peer-to-peer transactions. Because by calling it property, that means that I have to check whatever the cost, what Bitcoin is against the US dollar. So if I'm trying to send Ella $5 in Bitcoin and then it turns out to be $10, then suddenly I have a $5 gain. So it really affected people's desire to use Bitcoin in our country as a currency because they decided to call it this property. It did sort of lay out rules about mining virtual currency and what it would mean as to how you figure out the fair market value. But essentially, virtual currency was this convertible virtual currency in the minds of at least some people in Treasury, but again, treated as property by the IRS. And then in 2015, what I think was the lucky break for Bitcoin as far as policy concerns is the Commodity Future Trading Commission called Bitcoin a commodity. They determined the status of Bitcoin as a commodity. The idea of when you call something like this a commodity is that it usually has a futures or options market with it. So Bitcoin had Bitcoin futures and options with Chicago Mercantile Exchange, Chicago Board Options Exchange. You now see that same argument with Ethereum because there's futures and options to that, which is why the CFTC, at least for now, has designated Ether a commodity. But that could be up for debate because the SEC could really say, they could even say to Bitcoin at any time that it's a security. But typically, if you have an options and futures market and the market is treating something, like the people are just treating it the way the market is acting, they say, okay, well, the market is acting this way. People are doing options and futures. So Bitcoin is a commodity. And that's really important, right? And that's really a lot of when you look at Bitcoin, is it property? Is it convertible virtual currency? At the end of the day, at least in the United States, since 2015, Bitcoin's really, to me, been in a safe regulatory location because it's a commodity. I can, sell it, buy it. There isn't any spot market overview of that. It's like selling orange juice, if you're familiar with the futures market, or pork bellies or anything like that. So that's really where I think Bitcoin got a real nice break from a policy perspective. And so here we look at the interpretations of Bitcoin, why it can be confusing, right? FinCEN considers Bitcoin a convertible virtual currency. The SEC doesn't seem to consider Bitcoin a security, but I can tell you I'm at Capitol Hill. I talked to congressional offices, senator offices. There was a bill just a couple of years ago where they put in the bill that Bitcoin would be a commodity. And the SEC even had problem with that language. And they said, well, why? You've already really basically said Bitcoin isn't a security. And the answer was, well, we just want to keep our options open. So that's why I say the SEC does not seem to consider Bitcoin a security. The IRS considers Bitcoin a property. CFTC considers Bitcoin a commodity. Again, to me, it's not great that the IRS considers Bitcoin a property, but they just don't know how else to collect taxes. FinCEN wants to call Bitcoin a convertible virtual currency because they're worried about illicit finance. Okay, that's fine. The important thing to me is that the CFTC considers Bitcoin a commodity and that we need that to kind of stay. But again, this is something for all of you to think about is, there's 4 different agencies in one government that have 4 different ways of interpreting Bitcoin. What should we do? How are we supposed to make sense of this? And part of it is because it's a brand new item. It doesn't really have a definition to it. So ongoing Bitcoin policy issues, Bitcoin in banking. In 2020, Brian Brooks became the acting comptroller of the Office of Comptroller of the Currency. That's a banking regulator that deals with the largest banks like JP Morgan Chase, Bank of America. And he wrote all these letters allowing for custody of Bitcoin. You could hold reserves of stable coins in banks and so on. He actually had a couple of letters ready to go that he was never actually able to introduce that would have allowed like JP Morgan Chase to sell Bitcoin, right, in its bank. But it's funny because some people in Treasury in the US government thought that was so abhorrent, so like unethical was the word that they used. They couldn't even believe that it was even proposed as an idea. They could walk into a bank and buy Bitcoin. So there's still a lot of fears about it. And I'll explain why that is in a second to wrap up. Central bank digital currencies or digital dollars introduced in 2020. I broke the story in 2020 about when Congress during the pandemic was trying to issue digital dollars as a way of getting money to people. There were a lot of reasons for that. Why do you have to have people come to a crowded place or on an ATM to get money? Maybe we could just transmit it and then they could use it in this way. National security risks of Bitcoin. Again, the North Korea or DPRK is the biggest concern. What really brought everybody's attention, and again, we saw Section 311 of the Patriot Act come back, was the Hamas attacks on Israel. And then what we have right now, the landscape is there's pressures from the Terra Luna stablecoin failure, FTX failure in 22, and potential new US legislation. Issue with Terra Luna is it's an algorithmic stablecoin, and there's questions about how do we regulate stablecoins. Some organizations, including Circle, that has USDC, wants to have a regulated stablecoin market, and they want to have a bill pass. The spot market regulation of Bitcoin or other cryptocurrencies is what's come up since FTX. Can the market be manipulated? There is manipulation authority that the CFTC has because of Bitcoin options and futures, but this would be more stringent. It would probably change the way that we can trade in Bitcoin today, so I'm not necessarily in favor of that. And then finally, the prudential regulation of affiliates, which again, we had this failure of FTX in 22, we had Mt. Gox in 14. FTX was doing, everybody in the Bitcoin business is very small. All these organizations were kind of doing business with each other. So when one of them failed, it was kind of like dominoes. So the question is, do you separate out, some of these organizations or be careful if there's affiliate or risk? Good news for Bitcoin. We had Bitcoin ETFs approved in 2024, but we still have a president that's worried, particularly with the energy use of Bitcoin, where the president's budget that just dropped last Monday is calling for a 30% tax on Bitcoin mining, and also the implementation of this wash sale rule that exists right for stocks, but doesn't exist for cryptocurrency. So where we are today, and just again, something for everyone to think about is I would say 2 main issues. Like there are a lot of questions here again to think about, but the first main issue is you see sort of the history of Bitcoin and how Bitcoin grew up, right, for the last 12 years, and you have a lot of people worried about its illicit use, and that's been the main focus of policymakers. So, you have this issue of, do we need to do know your customer? If you look at the Bitcoin white paper and what Satoshi wrote, he makes it pretty clear, like, identity is going to be treated differently in this case. It's about, making transactions, and it's keeping the identity of the person hidden, which was not to like keep privacy or keep people hidden from the transactions. It was just the way Bitcoin was built as opposed to the banking system. And you can look at the Satoshi paper. You can see he even draws a very nice diagram the way it is in banks, where they hide the transactions and the identity. They do everything behind closed doors, whereas here it's hiding the identity, but having the transactions be open to the public. Sometimes I think that's abused a little bit by blockchain analytic companies to try to figure out who people are. But there still is this question of how do you perform like know your customer rules, which is really a bank consideration and goes all the way back to the 1970s when there was cocaine and drug trades, and a U.S. Treasury agent could take a suitcase of cash from you in the middle of the street if they even noticed a trace of cocaine on your cash, even if it wasn't you that did it, and just take it and walk away with all of your money. So they really were nervous about it back then. That's what started the whole BSA KYC thing, was, the drug wars. And then, of course, after 9/11, there was this concern about how terrorists might get cash. It's a new concept. It's not typical. So that's the main thing, is the illicit use of Bitcoin, and how do we deal with that from a policy perspective. The other main issue I'd say is from exchanges, is we've had these big exchanges blow up. So, it's important, I think, to try to keep your Bitcoin in self-custody, and it takes a lot of care and understanding of how to do that. But also to understand is there aren't really any regulations over Bitcoin exchanges. There's no federal policy about it. There's no regulators looking at them. There's some state regulations, but there isn't any formal way of regulating exchanges like Coinbase today. And that should tell you that we're still in the Wild West. We have all these, fancy like internet, we have fancy computers, all these wonderful things that almost makes it seems like everything's civilized, but really it's kind of like the wildcat banking of 1836, when you had banks that would just close overnight. So just be careful out there with the exchanges. There really isn't any formal way of being protected. And that's why I suggest things like, self-custody. So there's a lot of other issues here. I hope this was interesting and helpful. Ella, I'll turn it back to you. If there are any questions or follow-ups, I'm happy to answer any questions. And again, we'll share this deck with everybody. So thanks very much.
No, thank you, Jason. Big round of applause. I'll definitely turn it over to everyone else to ask questions, but since you've brought up Vincent, can you just speak a little bit more on the kind of ban on Bitcoin privacy best practices that was happening closer to last year? Just maybe touch on that a little bit.
Yeah, I think when you talk about like Bitcoin privacy, you're talking about mixers and the ability.
Yeah, and just like you can't reuse addresses and just that
Yeah,
conversation.
yeah. So the October Hamas attack on Israel brought the notion again of the U.S. Patriot Act into use. And U.S. Patriot Act Section 311 has 5 different sections to it. The 5th section can identify a specific institution as a money laundering concern, or can consider a whole set of transactions as a money laundering concern. A whole class of transactions, excuse me. So like I was talking about with Liberty Reserve back in 2006 that folded in 2013, Liberty Reserve was labeled by FinCEN in 2013 a money laundering concern as an institution. In 2023, FinCEN immediately after the Hamas attack labeled all of Bitcoin mixers as a class of transactions that are a money laundering concern at the international level. So what does that mean? That means that banks or financial institutions have to do, ongoing reporting and surveillance of these specific types of transactions. And it, as you say, Ella, made it so, you could not really perform Bitcoin mixing anymore. It was a proposed rule, but as you know, things like Wallet of Satoshi and others have closed their operations in the US as a result. This is not a law that was created by our representatives. This was something that was provided by an executive agency saying, this had to be done. And it really was something that relates back a little bit to like Tornado Cash, and which you probably heard about, and also recently Bitcoin Fog that was just had its sentencing. It's made it so that mixers are really they've been labeled for a long time as potential money laundering concern, just as like, Bitcoin ATMs or CBCs are also considered that. To me, this is uh, what I call an attack on digital cash. So there's been this attack on cash ever since really the drug trades in the 1970s, 1980s, when having large amounts of cash made you suspect that maybe you were a drug dealer. And so there's reasons why there's like cash limits on ATMs and everything else is it's just seen that, unless you're working through the banking system, you might be suspect of being a drug dealer. So they apply that same logic to these Bitcoin mixers of saying, well, if you're using a mixer to hide your identity, you're a drug dealer, or you're probably a drug dealer. So the idea is to try to shut off a Bitcoin ATM, again, off that same premise that you're probably doing something illicit. And that's why there's rules like with the IRS, if you ever do a cash transaction over $10,000, you have to report that to the IRS. So that's a little bit of background. Again, it is because of this Section 311 of the Patriot Act that had to do with 9/11 and the terrorists back then in 2001 who were doing money laundering and were using the banking system to help fund this attack on America. And so that's why we're in a very difficult situation now. There really isn't any reason or rationale behind it, except that they're putting Bitcoin in the same concept as I call it, as a war on digital cash versus just regular cash, because I don't think they know how else to treat it. And they worry about who's using it because they don't feel like they have full view into who's using it.
Yeah. Yeah. No, thank you for providing that context. Jason, also, could you share more on your story, right after Cornell, kind of some of your career path and how all of that evolved?
Yeah, sure. Um, so I went to be a broker at Morgan Stanley, and that's when 9/11 happened. I was in New York when that happened. So it's an interesting time to try to start out as a stockbroker, but I was very interested in how financial products and services were offered to people. And I basically worked at a bank, I worked at Morgan Stanley, and then I worked at an insurance company. And I realized that an insurance company, they're essentially trying to sell you, insurance is the priority. If you're going to a stockbroker company, they're trying to sell you stocks. And if you're at a bank, they want you to put your money into, a deposit account and take out a loan. Um, and I thought about all three of these different things. And then I went back and got my MBA. And I studied at finance, and I ended up working at the FDIC, where in 2008, I kind of lucked into, you could say the country wasn't lucky, but I lucked into this position at the FDIC where I was working for the director of finance. And when I got there, he told me, I should bring a pillow because it's going to be a really boring summer. And he's like, oh, but we have this one bank out there, IndyMac Bank, but, we have $60 billion in the FDIC deposit insurance fund. So that happens, don't worry about it. But you're just going to be doing these boring statistics reports. So it's going to be like, basically, Jason, you can have a really boring internship. Well, like 2 weeks later, IndyMac went down in California. My boss flew out on a plane. I didn't see him the rest of the summer because he was out in California the entire time. In fact, I had a picture of my boss at my desk on my computer to remind me like who I worked for. And I suddenly just got pulled in a bunch of different directions because I was actually assisting. Where I got my start was I was assisting IndyMac when it was bought by the FDIC, where I helped create a spreadsheet to show the losses that were happening out of IndyMac Bank. So I created this spreadsheet. It helped the FDIC board of directors. And it was really interesting because at the time, this was just when YouTube started. So people in their 20s and 30s were watching people in their 50s and 60s go to a bank with a briefcase asking for all their money to leave. And the people, younger people started mimicking that behavior, thinking, well, if they're going to the bank, we should do the same thing. And it was all from watching these YouTube videos. So it was really a YouTube inspired banking crisis that the FDIC quickly learned from that experience and started promoting their own YouTube videos about the safety and soundness of the banking system on YouTube as a way to push back on it. And I'd say that the reason I share that little anecdote in my story is in 2008, that's what really opened my eyes to where now there's groups of people like yourselves, Ella, who are looking at maybe the Federal Reserve and the way money is run in this country isn't the safest. As it hit me that it was all like a public relations campaign to keep people feeling safe about the banking system. There wasn't actually anything backing in the Federal Reserve all these people's money. So if people lost faith in the banking system, the whole banking system would collapse. And that's an important word when you think about it. That's faith. That means it requires the people to believe in the way the banking system works, because there wasn't enough money. There isn't enough money to go around to pay everybody's insurance if a certain number of banks failed. That's why you see a lot of these, shotgun bank marriages. So just at the time that Satoshi Nakamoto introduced this amazing invention called Bitcoin, I was having my own thoughts about this loss of faith. And at the time, all I really had was Ron Paul to listen to, who was concerned about the Fed. And he was considered this like crazy person who kept complaining about all the things the Federal Reserve did. So from there, I was a regulator for about 6 or 7 years. And then I got my start in the industry in 2016, where I was director of policy at the Chamber of Digital Commerce for a year, and then have done my own consulting and work. And really excited now. I do stuff with the Bitcoin Policy Institute in 2023. At the time in 2016, I basically went all in on Bitcoin. I was doing consulting, but I just thought the idea was so interesting when it was shared with me, and it connected with me so much from my experience as a regulator that I threw every other career angle like out the window, and I've just been in this space since, and it's been a great run.
Yeah. Thank you, Jason. Okay, now I'll open it up to everyone here for questions. Yeah, Sal, and then, yeah, you can just, I don't know if you want to, maybe, I think you can just talk and just pick it up, but yeah.
Hey, Jason, thanks for making time. Go Big Red, first year MBA student here.
Great.
I would love to get your high level take on having BlackRock being one of the biggest spot demand purchasers for Bitcoin since they were approved over the last 7-8 weeks. What does that mean from a policy perspective? When we have the type of institutional demand being channeled into the spot Bitcoin ecosystem, what are you seeing from the policy perspective? That's, we have obviously US senators from New England that have a very different perspective than maybe what Larry Fink is saying, right, from BlackRock. So I would love to get your nuanced take on what does that institutional demand mean for policy for the New England type of perspective from the US Senate.
Yeah. So the question is, right, the amount of Bitcoin that's needed, right, by BlackRock for its ETF. And there are obviously, it's not just BlackRock, but there are other ETFs that are approved, right? So part of the deal when the ETFs were approved by the SEC was that they would trade the Bitcoin within each other. So in other words, as we keep hearing about Grayscale having these runoffs, as they sell their Bitcoin, they've have this sort of gentleman's agreement, let's call it, with the other groups to sell it to BlackRock. So that's why there isn't necessarily the impact that you might think would happen on just all of the Bitcoin that's out there. Now, there is a good question, right? Because do we reach a point where someone needs all the Bitcoin, right, to cover certain regulatory parameters? This is the fix right now, which is to simply have these ETF companies, these large companies like BlackRock and Fidelity, just move the Bitcoin between them, almost like peer-to-peer trading, which it might initially sound to some as like this nefarious activity, but it actually makes sense from a market perspective, because what the SEC was worried about when they approved the ETFs is just what you're saying, is if BlackRock demands all of this, Bitcoin, is it just going to drive the price of Bitcoin to where it can be manipulated and out of scale? And so the idea is that with ETFs, sometimes you need to buy Bitcoin and sometimes you need to sell Bitcoin. So the companies are just directly trading it, with each other. And you see that a lot if you look on transactions, you can see the blockchain transactions too as well. It's a temporary fix. I think what you're talking about is important because I think they'll have to revisit this probably toward the end of the year if Bitcoin ETFs continue to be successful.
Thank you.
You got it.
Hi, Jason. Thanks for being here. First, I wanted to appreciate the train collection behind your back. I really like it. Second, similar to Sal's question, what do you think about Ethereum ETF on the prospects of it being approved?
What do I think about Ethereum ETFs?
Yeah.
And whether they'll be approved by the SEC?
And do you think it's possible?
Yeah, so it's interesting. There's right now there's a lot of debate now about whether the SEC is actually going to call Ethereum a security. The SEC made it very clear. If you look at the Bitcoin ETF announcement, they said for something to be an ETF, it has to be considered not a security. So what I imagine happened is a lot of these people trying to do an Ethereum ETF were going to the SEC and we're trying to say we want this to be approved just like Bitcoin. But Gary Gensler made it very clear that the bar is Bitcoin, that you have to make it clear. And right now, I mean, Bitcoin is really the only fully decentralized project. Ethereum is probably very close to that, but Bitcoin is this gold standard of decentralization. All the other projects aren't necessarily decentralized. And so since the SEC is looking at everything from this decentralized perspective, what I think has happened is the quest for an Ether ETF is getting blowback because of this notion of, is it fully decentralized like Bitcoin, and is it meeting that standard? And I think Gary Gensler and his team are pushing back on BlackRock and others trying to do an Ethereum ETF, saying, you know, this doesn't pass muster. There's now stories going around, and I was just talking to Eleanor Tennant at Fox News and some other groups who are following this about whether the SEC wants to call Ethereum a security in general. That's really just the outcome of your question, and which is like about what will it be approved? Because I think by all of these groups coming to the SEC trying to get an Ether ETF approved, it's caused the SEC to step back and have a wider question of, well, do we actually need, if we're going to disapprove an Ethereum ETF, does that mean that we have to then say Ethereum is a security? And part of the problem is that Ethereum switched from proof of work to proof of stake, you know, with its consensus mechanism. And what we're hearing is the SEC might be saying, because it's now a proof of stake mechanism, you know, that it's a security. Well, what would probably happen at that point is Ethereum would seem unlikely, but they probably switch back to proof of work, right, to get out of being called security, which I think might be the most interesting story we'd ever watch, and really bring questions as to the actual decentralized nature of Ethereum. But Ethereum's in a little bit of a pickle now. You know, the Ethereum Foundation just got a subpoena, I guess, from a state authority. So, you know, the Bloomberg ETF and analysts who followed the approval of the Bitcoin ETFs, they said, you know, it's unlikely now because the SEC just isn't engaging with those trying to do an Ethereum ETF the way they were with Bitcoin ETFs. So for now, I would say you're probably not going to see one in 2024. Now, it's not to say you won't see one in 2025 or after, but I think this year it's probably off the table.
What else? Well, I have another question, Jason, kind of asked in two ways. So what advice would you give to students who would like to enter into kind of the policy area? And then similarly, what advice would you give to students just in general as they're thinking about Bitcoin? You know, hasn't been around that long, just general career advice of keeping an open mind and whatnot.
Yeah, so for the first part, I would try to get work somewhere with a group in Washington, D.C., whether it's a lobbying firm or there's lots of Bitcoin organizations like Riot that does, you know, Bitcoin mining. There's a whole set of Bitcoin companies. I don't know if there's like a Bitcoin jobs list serve or something that shows, you know, opportunities, or try to work with one of the trade associations, like get an internship with the Chamber of Digital Commerce or Blockchain Association. Because that will really show you sort of the debate and get you used to understanding all of the different issues. I would imagine right now there's so many, even if you wanted to go work on the Hill in DC and just say, I want to work in a crypto portfolio, you might even be able to get some sort of fellowship in a congressional office. So wherever you live, just ask, you know, your local congressman or congresswoman, and you could probably get hired in DC and learn a lot about what's happening in the Bitcoin world that way too. Broadly, so in 2016, I had the opportunity at the Chamber of Digital Commerce, and it's somewhere out in the internet video, of introducing Nick Szabo, who created BitGold and also did the smart contracts. And people liked the line I gave where he was a cryptographer, a computer scientist, and a lawyer. And so if you're looking to really explore Bitcoin as a field, I think understanding how cryptography works, understanding how computer science works in general, and also the legal field is a good background for understanding both the policy and regulatory implications of Bitcoin, as well as help you see, what you might be able to build on the Bitcoin network.
Yeah, no, great advice. Thank you, Jason. Oh yeah, Carlos. If you want to comment a little, I don't know if you can see you. You can just talk, whatever's good.
Well, my question is really simple. What can we expect after Bitcoin's next halving?
So the miners will get less Bitcoin.
Yeah.
So, sorry, and I'm sorry, what was your name?
Charlie.
Charlie, great question. So when you say what can you expect, I'm going to pick on you for a minute, but are you asking me like what you think we can expect from the price of Bitcoin, or what we can expect the miners are going to be doing with their Bitcoin, or is there another aspect of your question you're trying to get at?
I would prefer around the Bitcoin ecosystem and not much in the pricing.
Okay, good. Yeah, so look, Bitcoin miners traditionally with the Bitcoin halving, what you have is you have all these folks who start to unload their Bitcoin, the miners, because mining is a very margin intensive business. And so suddenly you're getting half the Bitcoin you were. So in any business, right, if suddenly you're getting half of what you were usually getting, that cuts your profits in 50%. So what do? You sell whatever you have on hand, which means they sell more Bitcoin, but then it suddenly creates this demand and it drives the price up. And it's just happened after every halvening. But I think for the Bitcoin ecosystem, what's important this time is that there's lots of work being done on layer 2 Bitcoins, particularly like with Lightspark that David Marcus is building and others. And what I think you'll see is there'll be a little bit more decentralization amongst the Bitcoin miners because it's going to be competitive. You're not going to see the Bitcoin mining set up as it is today. So you'll see other people be able to enter into that Bitcoin mining market and take advantage of the lower amount of Bitcoin that's given. I think you'll see an opportunity for how fees are offered on the Bitcoin network, because one of the things people wonder about is, what will the fees look like? And you might see fees start to get higher to make up for the shortfall in mining this time around. People are getting more sophisticated about understanding what happens when there's a halvening. I don't know what much more beyond like the impact to the Bitcoin ecosystem is, except that it brings awareness to the ecosystem. It's like and every 4 years now that's been built into Bitcoin that we cut the amount of Bitcoin in half because it's really less in circulation. So maybe you bring a little more awareness to people about the fact that Bitcoin is finite. There isn't that much to go around. And it's almost like celebrating that a computer program, is working the way it should every 4 years. But it is an exciting time for Bitcoin. And so I'd really say, try to go to a halvening party, enjoy it, learn from other people. It's a great experience. And, definitely you'll see a lot of interest pick up around Bitcoin as a result of this in the next, less than a month, I think. April 20th is the expected date. So,
Yeah. And we're going to have a party. So everyone can come. Yes. Yes. Well, Jason, thank you so much for your presentation and your time and, all the Q&A, and just so grateful. Thank you so much.
absolutely.
Yes.
My pleasure.
And thank you so much.
Bye.
Bye. Perfect. When? I'll show you okay, so I wanted to, actually, this is awesome. We're gonna go over this a little bit. Okay, so let me go. Okay, so couple updates. I went through and kind of cleaned up our campus groups in Slack. So now everyone is in Slack, everyone is in campus groups. I'm going to send all of like the emails and events through campus groups. I tried to send like a text notification push. I don't think that worked because I didn't get anything, so I'll figure that out. But this is the schedule for the rest of the semester. So I'm gonna flip back, but at the beginning of the semester, we, did this poll, what are we interested in? So I think we pretty much will hit on everything. So I'm gonna walk through what's coming up. Next week, I know it's kind of right before spring break, but we will have a really good talk with Bradley Brettler, kind of a more philosophical Bitcoin discussion. They have a new book coming out. It's called Resistance Money. They've written, tons and tons on their websites. They're incredible. Or there's kind of 3 authors of this book. And then we're going to have Elizabeth Stark from Lightning Labs. So excited to have her. And then right after that, on April 18th, we will have our having party. And so I saw yesterday though that it's maybe April 19th. Like we don't know exactly the date of when the halving will occur. So people are really pushing for 420 because it would just be a very cool date. But then yesterday I saw that there people are like, miners, like slow down, like because the date moved to the 19th. So it'll be timely right around there. And then we're going to have a kind of a more like hands-on technical lightning session with D++, and then wrap up with a talk on kind of human rights. And then during our party, though, I would like to talk about like plans for next semester, elections and whatnot. And so definitely that will be a good, like, we'll get food, just a nice gathering and like thinking about what do we want for next semester. And then we do have the room booked for May 9th, but I know like that's after the last day of classes. So we'll take a poll on if we want that meeting to occur or not, but that's kind of the map of the rest of the semester. But does anyone have any questions or can I do anything for anyone? In the meantime, I'm just going to keep this in the slide deck. If you would like a free ticket to Bitcoin Nashville, please like register, sign up. The link's in the slides. The Bitcoin Policy Summit. So Jason, who we just had, is very involved with the Bitcoin Policy Institute. And on April 9th, they have a summit. If you would like to join us, please let me know. And then also, this was just the field research opportunity. I put more info on that in the emails. And that's kind of it for today. So thank you, everybody. Okay.